Imagine you're walking through a forest. Some trees are already hundreds of years old, strong, stable, and towering above everything else. Others are still young saplings. Today they are small, however, given enough time, sunlight, and care, some of them may one day become giant trees. Companies grow in a similar way, and small cap mutual funds invest in many of these young growing businesses. In our previous video, we explored large cap mutual funds. These are the funds that invest in some of the biggest and most established companies in the market. Today, let's move to the opposite end of spectrum and let's explore about small cap mutual funds. These funds primarily invest in smaller companies that are still in their growth phase. Although they tend to be more volatile, they also offer the potential for higher long term returns if these businesses grow successfully. Companies are broadly classified into three categories based on their full market capitalization. The top 100 companies are large caps. Companies ranked 101 to 250 are mid caps, and companies ranked 251 onwards are small caps. Large cap mutual funds invest primarily in large cap companies. Mid cap mutual funds primarily invests in mid cap companies. And small cap mutual funds primarily invest in small cap companies. In the previous video, we understood about large cap mutual funds. Today, we will understand about small cap mutual funds and we'll explore mid cap mutual funds in the next video. Think about a business that's just beginning to expand. It may be opening new factories, launching new products, entering new cities, or building its brand. If everything goes well, such businesses can grow much faster than companies that are already industry leaders. As these companies grow, their share price may also increase significantly. A small cap mutual fund primarily invests in these companies, so the fund's performance largely depends on how these businesses perform over time. That's why small cap mutual funds are known for their higher growth potential. However, every opportunity comes with its own risks. Every coin has two sides. While small cap companies have the potential to grow rapidly, they also face greater uncertainty. They may have limited financial resources, they may face intense competition, or they may be more vulnerable during difficult economic conditions. As a result, their stock price can be highly unpredictable. Since small cap mutual funds primarily invest in these companies, they also tend to be more volatile. That's why small cap mutual funds are generally more volatile than large cap and mid cap funds.
But why are they riskier?
Remember, when we call a company small cap, we are referring to its market capitalization, not its popularity, brand value, or the size of its business operations. A company doesn't have to be unknown just because it's a small cap company. Many beginners wrongly assume small cap means small businesses. A company can have a well known brand and still be classified as a small cap company due to its market capitalization. In fact, you may already be familiar with some small cap companies. Take an example of Hawkins Cooker. Its pressure cookers and cookware have been used in Indian household for decades. Yet, based on its market capitalization, it falls into the small cap category. This shows that small cap doesn't necessarily mean an unknown company. It simply refers to its market capitalization relative to other listed companies. Since small cap mutual funds primarily invest in companies like these, they provide investors an opportunity to participate in their future growth. However, as we discussed earlier, that growth is never granted.
Who are small cap funds suitable for?
Small cap mutual funds require more patience than large cap mutual funds. Hence, they are generally suited for investors who have a long term investment horizon, the investors who can handle significant market fluctuations and volatility, investors who understand that short term losses are possible, and investors who are willing to wait patiently for business growth. We have already explored the stability of large cap mutual funds and the growth potential of small cap mutual funds. In the next video, we'll understand mid cap mutual funds, the category that sits right between the two. Hope this video was useful to you and you have learned something today. If yes, then